All right. This is Charles Becco, y'all. And I want to thank everybody for being here today. We will be talking about, is the stock market going to heaven, or is the stock market going to hell, right? I'm your host, Charles Becco, and joining with me is Helen too. And we're about to get this started. Man, let me just get these links together. Get these links. All right. No music. All right, team. Man, we've had just a very, 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 very wild time in equities, right? We saw that there was going to be some bullishness. There was, so now what is going to be the situation? Are we going to keep going up, or are we going to go tumbling down to Golgotha, to hell? All right. Again, my name is Charles Becco, former financial advisor, crypto investor, father, believer. And I'm joined here by Helen too, one of Clubhouse's largest stock market room moderator. Also has a Telegram group that operates with over 4,000 or 5,000 members via all of the combined groups. All right. And so right now, what I'm going to do here is I'm going to get the links so I can send it out to everyone, okay? Because we are multi-stream on Facebook, Clubhouse, Twitch, as well as YouTube. So just give me one moment while I get out the links to all our different communities, and we will start the show. But basically, equities are kind of pushing to a level that, is kind of unsustainable up here in the short term. And we do really need like a pullback. And so we're going to be looking at the charts. We're going to be breaking it down and seeing potential areas of support. Recently, we've seen inflation data kind of cool off, right? And so we could talk about that as well. And just in general, we've seen some wild moves out of Tesla. We've seen wild moves out of Netflix. We've seen wild moves out of Apple. In fact, Apple is like $10, $11 away from being an all-time high with this very precarious financial situation, which is kind of wild. Excuse me. All right, so we got all of the links out, I believe. I think we just maybe missed one room, and let me just get this out to the last room, and we will begin. Okay. All right. Helen, are you with us? Are you here, Helen? I know that she kind of goes in and out from time to time. Okay, we're gonna. Okay.
I'm here.
Okay, Helen, introduce yourself to the audience. Let people know who you are, where you come from, and what is it that you do.
I'm Helen. I open Clubhouse every day for stock analysis and share some financial, economic news, and then traveling trader. I travel everywhere and trade in the meantime. So if you want to share your information with us, just join us every day. We open probably we never close during the day, weekdays. So come before like a couple hours before the market open, and we can have fun, trade and fun. How's that?
All right. Yeah, that was pretty good, Helen. Thank you so very much. And so we got up on the screen here a chart of the S&P 500. Okay, so I'm just going to get that out to you guys here. We're going to break this down, right? Give me 1 second. Somebody asked me a question on the back end, and all right, that's it. All right, so what's going on here, right? All right, so for pretty much a year, right? Since up here, like the beginning of January, we've been going just pretty much down and down and down. I mean, we had a few bounces here and then down, bounce higher, down, and we kind of found a momentary floor here at June 17th, which actually was my birthday. And funny story, I finally got sick with COVID for the very first time. Haha, not so very funny. All right, so I do want you to pay attention to this little pattern here, right? As we were kind of pulling back, we would kind of come down, kind of do like a little double bottom bounce to go up higher, come down, do like a little double bottom bounce to go higher, come down, double bottom bounce, down, double bottom bounce, and now we're higher, right? So each time, we kind of came up, tested the, before when the market was bullish, right, we would test the 200, and then bounce to retest. And then one time we went above, right? And so we haven't had a 200 retest of the 200 EMA here since all the way back in April, right? So it makes sense that we're kind of overdue for a 200 retest, So the question is this, right? The question is this, okay? Do we come down to, like, let's say retest the daily 21 at around 4,000 and bounce higher? Or do we kind of follow this pattern, right, where we come down to a double bottom bounce, double bottom bounce, double bottom bounce, and to go lower, right? So are we going to heaven or are we going to hell? Okay? And so that's the question that hopefully we can answer today. Just give us a second here. We'll do a quick reset. So for people who are just joining us here today, my name is Charles Becco, a former financial advisor, MBA grad, stock trading analyst here. And pretty much we are breaking down the stock market. I am joined with Helen too, one of Clubhouse's largest stock market rooms moderators. She also has a room, several clubs on Telegram where she manages thousands of members. And together we will be analyzing and breaking down the stock market. This is the only Clubhouse show that is streamed on multi-streamed, on YouTube, Facebook, Twitch, and YouTube. YouTube, Facebook, Twitch, and Clubhouse, Right? So let's begin. All right, so basically, right, we're overdue for a retest, right? And so as we kind of plug into the chart, the only question we have is this, okay? Are we going to retest to the 8? I think that's very unlikely. For this kind of outsized moves that we made, that was several hundred points here on the S&P 500, I'm thinking we're going to come down to first test this 407 handle and possibly 4,000, okay? This is the ES. We're just looking at the futures here. If you want to look at the SPY, here it is. Okay, here's the SPY. The SPY chart is a little bit messy because I have levels all over the place. I do apologize for those who are joining us on the internet or your cell phones. I know this looks crazy, but just bear with us, right? And so, we're looking to potentially, okay? We have to come down here. We have to chill out. We've got a gap here, big gap between 412 and 417 on the S&P 500. We're way extended up to the third ATR. For people who don't know what the ATR, that is the final level of average true range, which is just the highest standard deviation that we could kind of go up before we need a retest, right? Here's some good news, right? We punched above the 200 at 417, but the question is, do we come down to 417 and bounce? Do we come down to the 8 here, 414 and bounce? Or do we come all the way down here to the 21 and potentially bounce between 404 and 400? For me, when you have an outsized move like this, especially when you have price leaving the simple or exponential moving averages like this, typically, right, as you have an expansion of the price, again, just gapping up off of the simple moving averages, you typically get a retest not only to the 8 but also to the 21, right? So we're looking for SPY to potentially come down here, retest 400 to see if we could potentially bounce higher. Okay, this is a daily time frame of the S&P 500. As we kind of punch in a little bit closer, we see here that there's a low here that was printed out today at 419. And so if we were to close below, what's that, 419.18 here on the S&P 500, we will be in a technical short setup. Okay, so look out for that, right? And so a lot of the charts that we're going to be seeing looks exactly like this, right? We punched over the 200. The averages are stacked positively. And when these averages are stacked positively like this, typically it means that there should be some pretty good support there. You know, let's take a look at Apple, because for the longest time I've said it time again, hey, if Apple could just close above this level around 165.50, if we could close above there, then yeah, potentially we could keep going. And Apple has just been like a rocket, right? I mean, from the lows of 130 right up to, like, I mean, we're literally, I mean, I don't know if you guys noticed, but we're spitting distance to all-time highs on Apple, right? And some of you might be wondering, how could that be? Well, it's very simple. Regardless of the environment, right, Apple has inflation-resistant products. People will sell their arm and leg for the Apple products. People are not downsizing their Apple products. People are just continually upgrading within the Apple ecosystem. And so Apple, along with Amazon, are two companies that people believe will be inflation resistant, especially Amazon, which is like one of the number one cost control, price control companies in the world. I mean, you know, I ran a construction business for many years, and in our construction business, we were able to get supplies from Amazon, the same supplies you're able to get that were at prices better than wholesalers and distributors for certain items. It was actually cheaper to actually just buy it on Amazon. That is how insane Amazon's price cutting and price saving measures actually are. Okay, so yeah, so Apple here. Here's what the big issue was. Okay, let me kind of drop some sauce on you guys. The issue with Apple for really the whole year really was the fact that we were in a technical short setup here that fired off in May, and as we kind of came in June, we kind of bounced out of it, right? As you can see here, you have a big, fat, veiny, engulfing candle here. Okay, there it is. Okay, you have this big engulfing candle here that pretty much set us up to bounce out of the short setup. And I think Apple is one of these companies that could potentially, okay, lead us out of these poor market doldrums. Okay, I have been talking quite a bit. Helen, do you have any thoughts so far on Apple or the S&P 500? Any thoughts on any one of those two tickers? Helen.
Yeah, Apple is pretty bullish recently. So for S&P 500 today, did you notice energy sector went up? And I think I haven't noticed if the Nasdaq went down, because I was focused on individual stocks like XPV and some NIO, some kind of Chinese electric vehicle companies, individual stocks. So I didn't pay attention a lot, but I didn't pay a lot of attention on Apple. Is pretty strong because their sales in China. I read some news. They are number one. They exit. They surpass the other two big brands in China. They were only 10% in 2020. They only had 10% market share, and right now they have over 20. So doubled in 2 years. Just imagine the population in China. And right now they are number one sales in China. So overall, they're doing pretty good. And in this kind of macroeconomic environment, they have a very good cash flow. They are cash cow. So there's some difference between Apple and Tesla because they're all good companies. But Tesla is still a growth company, and Apple are, they are pretty good. They have very good. If you look at their balance sheet, the cash flow, they have a lot of cash on hand. So some other news, they have some Monday. What is that? Extra dividend day. So every time you have this kind of event, the price is just went up accordingly. So for SP500, because the energy sector was good and financial sector was good, probably Nasdaq wasn't very good because let me check. So basically, my prediction, I don't have a lot of prediction, but for SP500, I think they will see. Yesterday was strong. Today is pretty much strong pullback. It didn't fall a lot. Only like a little bit, just 0.1%.
Yep.
3 points or 4 points down. So it's very strong pullback. So I predict tomorrow will be strong because Friday, as this kind of bull market, I'm looking for it. I'm promising on tomorrow, and also I think the rallies will be continue and also will pull back in the 2 or 3 days, a couple of days in between, and probably will still go up until the ER and the earning report end. So I'm not very bullish on September. So mostly, if you look at the history and data, after Labor Day, the market always has some pullback, sell off after Labor Day. But before Labor Day, or the most time they have little bit Labor Day rally. So I don't do a lot of prediction, but this is my note, some observation in the past.
All right.
You agree?
Yeah. There definitely is like a stock market almanac, So if you notice that, I had not noticed that Labor Day correlation, but I do take your word for it as a trusted member of all these different communities. So, Helen, I definitely want to thank you so very much for your analysis. At this point, I do see that we have some additional members here, and so I do want to give a quick reset to the room. Again, my name is Charles Becco here, joined by Helen too. Okay, from the Stock Market Analysis Group here on Clubhouse. We are multi-streaming our show on Facebook, YouTube, Clubhouse, and Twitch for all you gamers out there. Okay, shouts out to the Twitch crew. I know we haven't carried the stream to you guys. There was some technical foibles on the back end, but we were able to sort it out, right? And so at this moment and at this juncture, we would like all the people on the various platforms to please, if there are tickers, okay, if there are stocks that you want us to look at and break down for you live tonight on the show, okay, if you're on Clubhouse, please put those tickers in the chat room, okay? If you are on YouTube or Facebook, please put that in the comment section, please. YouTube has a chat, all right? And on you Twitch people, I'm sorry. We can't really monitor the commentary on the Twitch, right? And so if you can, try to link over to the YouTube page and throw it in the chat. And if someone who is nice enough in the Clubhouse community here could actually go and type those tickers from, at least the YouTube into this chat, that will be fantastic, okay? So right now, we're going to just go and do kind of a breakdown on a select group of tickers, and we will then take some suggestions from the audience, all right? All right, we are right back. All right, so here I have AMD. Actually, before I get into AMD, Helen, I know that your community over there in the West Coast, you guys follow AMD, the semiconductors often. I feel it's probably one of your top 10 most traded tickers from your various rooms. So before I get into my technical analysis, Helen, do you have any thoughts on AMD Advanced Micro Devices?
Well, yesterday the chart looked bullish. Today it looked kind of ugly. So I would think that we will consolidate that this really because semiconductor it's kind of tricky right now. So because you see energy and the finance went up today, so which means the money flowed to conservative areas like finance and energy, and also some defensive sectors. So probably the high tech, they always rotate sometimes. I haven't got any study on AMD, but I will do some more later.
Okay, cool. So here on Clubhouse, we got a Clubhouse veteran on here. I see Mr. Tony sitting in the gulag there. I don't know if he's able to speak, but because of just his experience, I will invite Mr. Tony up to the stage. Mr. Tony, if you do have a second to grace us with your presence, we would definitely, absolutely love to have you up on the stage and to give us some of your feedback. Mr. Tony has been trading the markets professionally for well over 30 years, and he's a very respected member in multiple communities here. All right, I know that sometimes he gets busy, right? But Mr. Tony put down he wants to take a look at MU. Okay, I see MU, Neo, XBEV, Upstart, and AMD. Okay, we are doing AMD right now. So basically with AMD, kind of a tricky chart, right? We had this huge, bullish run. Looks pretty much very similar to the S&P 500. We kind of went up, did kind of, you could say a double bottom into kind of like a cup and handle here. And we just kept going higher, well above the 200. And then, we got that really bearish news on the semiconductors, right? They're going to be ramping up. First of all, the stockpiles of chips are stacking up, right? And so NVIDIA put out guidance that some of their sales are going to be weaker because of just over inventory. It's basically a case of the bullwhip effect, right? Where, supply chains are really tight. Companies order more and more supply, more and more equipment. And then at one point, this supply chain slackens up a bit, and then you wind up with excess inventory. And then you have the cycle of too much inventory, too little inventory, and kind of crazy. And so right now in this cycle, we actually have too much inventory, and so the chips have been taking a beating in the interim. Now, with that being said, technically, AMD on a daily time frame is in a technical short setup on the daily time frame. However, AMD is benefiting from an extraordinarily strong market. So with the way that this chart, that this price action is looking, we're still hanging out in the body of this huge candle that made the high. So I'm not necessarily sure if this short pattern is going to play out, right? And normally, you really want to take a dip. You really want to buy the dip in a bullish trend and short the rips in a bearish trend, right? And so if you look at the current trend that we're in, okay, and I'm not saying that the trend can't change, right? But pretty much since July, right, it's just been up and up and up. You had this crazy hammer that was printed out yesterday, and now we have an inverted hammer printed out today. But on the daily time frame, we are still technically in a short setup, and it looks like you have this MACD here converging, maybe potentially to cross down. So to answer the question, I actually don't know. We do have bullish momentum. We did come down here and almost retested the 21. Then we had some buyers step in here at this demand zone between 95.45 and 95 flush, right? So, I mean, if we could close below the low of not today's bar, well, definitely today's bar, but definitely Wednesday's bar, then I could say, hey, that looks like maybe the bearish trend will continue, or maybe a bearish trend will be established, right? Because we are firmly under the 200. However, if price could get above the 200, and if it definitely could stay within the body of this high bar here, then hey, if it's not going down, sure, it could go sideways, but that would be more bullish than bearish, right? If something's going sideways and it's not going down, I personally interpret that as being more bullish. These are my thoughts on AMD. Let's take a look at MU for Mr. Tony real quick. Kind of a sloppy chart. Actually, not as clean as AMD, which is surprising. But you see that it's kind of in a channel here, right? Between $65 and $58. Not much I can say here. Okay, not much I can say here. Let me just take a look at the broadest chart. I see that the 8 is kind of firmly under the 21 here, which is not encouraging. We printed out a huge bearish hammer. Right now, my momentum indicators are choppy. This is a choppy ticker, right? So for me, there's no consensus here. So for me, I would not be trading this thing. If you like it long term, definitely think about adding some long-term shares here on MU if you like it. But if not, I don't see anything that, could be interpreted as something that's tradable if you're looking to potentially scalp or swing trade this thing, because it's kind of all over the place. This is my thought on MU. Helen, if you feel any differently or if you have any thoughts, feel free to interrupt me here, because I'm just kind of going through the tickers. Now, I took some from the audience here. Let me do some of my own here. Let's look at the Qs. Again, the Qs, very similar to the S&P 500. We came up here. We kissed 330. My goodness. Who would have thought? When we're firmly under the 200, right? So, again, is this uptrend going to continue or not? To me, there's a huge gap here between 322 and 318. I would say that gap will be closed sooner rather than later, especially when we're riding just under the 200 here. But again, the 21 is sitting there. You got the 50 down here. So there's a lot of support and resistance. Between price and the downside, right? So look at 310, look at 305 to be support levels. Definitely look at 300. We have a lot of support here, right? So even if we pull back a few points, even if we pull back 5%, right? There's a lot of support here. And to me, again, with weakening CPI data, with weakening inflation data, I should say, rather, I would, it's kind of hard to continue with the bearish narrative, right? I think the market is kind of fatigued with all the bearishness that's been going on, and it just needs to kind of catch a relief breather from that, right? And we've got a nice bounce, and right now I'm just seeing the underlying of these markets kind of fixing themselves. The earnings are coming out. The earnings are not as bad as people anticipated them to be, and in some ways, a lot of big companies beat, right? Especially if you're looking at something like an Amazon, right? That's just been beat the heck up. Amazon was getting beat up, before all this craziness, right? Look where it was, right? And yeah, we're holding. We retraced 100% here. Sorry, I'm hearing an echo. Let me just move this thing. Yeah, we retraced almost 100% here on the Fibonacci retracement tab, and right there to 100, and we held. Again, some of the longer term charts do look, still a little bit funky, but I'm seeing here that maybe it's time for a sigh of relief. But again, the monthly chart looks the hairiest, right? But we hit a low, then we have an engulfing candle higher, then we have another candle higher here. So the market may be ready to continue higher. Okay, here's Amazon, right? So this Amazon chart does not look very bad. You do have this insane gap here between 122 to 133. So you get like a short setup. You may want to target those areas. In fact, let me see here. Ooh, Amazon actually was in a short setup on the 9th here. What day is today? Today is the 11th. Well, the 9th was Tuesday. Okay. So on Tuesday, Amazon was in a short setup and it broke out of it, which is very bullish. That's a bullish sign, because if we were like truly in a bear market and we're in a bear trend, once these short signals print out, they pretty much fulfill, right? So the short signal that was printed out on Tuesday was actually firmly rejected here on Amazon. My goodness, right? And so that is a hint that maybe we are potentially don't quote me on this, I have no idea, but we could potentially be out of the bear market for now, because again, a signal like this that prints out, I would say 70% of the time, especially when it's on a daily time frame, which is a big time frame, these things just doesn't get broken, right? So this market, there is a lot of underlying here that I don't think this market really wants to go down. But can I see a gap fill here to 128 and possibly to 124 on Amazon? Sure, right? And the next time you do get a technical short set up, which, let me see here. Are we in it already? Are we actually in it already? Because, oh, shoot, Amazon was down 1.5% today. Let me see here. I think that was the high bar. Oh, shoot, yeah. So, very interesting. This is kind of rare, okay? So, we had a short setup here on Amazon on... This happened on Tuesday. We made a high bar yesterday, which is Wednesday, right? Out of the 30 days, right? I'm just going through my elementary school rules for these daily shorts. And we're actually in a technical short setup again on Amazon, right? So I'm thinking that this time around, this thing may print out. Again, just as a technical short setup, again, not saying that the market's going to die or go to hell, but as a technical short setup, I'll be targeting 138 Amazon and also 128 for this gap fill to the downside. Again, equities have been running red hot. We're kind of stretched. We are due for a nice flush down, right? Potentially to potentially go higher. Okay, so that is Amazonian. All right. Next up on this list is GOOG. Oh, did I hear somebody? Okay. Next up on this list is GOOG. Okay, another big high bar. We do have some it's a daily time frame. We did have some bearishness today. And so since today is the high bar, we're looking for a close below the low of the day, which is at 118.15. We get that tomorrow, and Google will also be in a technical short setup on the daily time frame. Again, doesn't necessarily mean that this thing is going to just roll over and die, right? But it does mean, hey, are we looking for an 8 SMA EMA retest? Sure. Are we looking for an 21 SMA retest? Sure. Could we potentially go down to the 50 or the 200? Hey, it's right there. It's right there. $6, right? But again, these moving averages are stacked positively, team. All right, so as we kind of come down to these levels, I will be looking more to buy the dip on Amazonian and Google and Apple once it turns itself around. Let's look at Tesla. I know that Tesla is a fan favorite. So here's the thing on Tesla, right? It's weird, right? There's always some kind of drama going on with Elon Musk. Elon Musk is like a rapper. Like he's always like gang beefing with somebody. He's gang beefing with Twitter. He's gang beefing with this billionaire. There's accusations of some kind of extramarital infidelity, this and that. I mean, this dude is like, listen, I love Elon Musk. I think he's fantastic, man. But this dude is like a rapper. Like there's always some kind of rap beef with Elon Musk, right? All we need is like a celebrity boxing match or something like that. But I think Elon Musk win. I think he'd have a nice little right hook. You know what I'm saying? I think out of all the tech billionaires, I think Elon Musk, he looked like he could potentially fight. He's African. Step it up. People don't understand that Elon Musk is from South Africa. South Africa ain't no joke, y'all. You know what I'm saying? So I'm pretty sure Elon Musk probably got a nice right hook somewhere in there. All right, so let's see what's going on with Tesla, okay? If you're looking at these bars, you're probably wondering, Charles, what the heck are these things? You know what these are? These are demand zones on Tesla, right? If you notice, right, price comes down, price goes up. Price comes down, price goes up. Price comes down, price goes up. Right? And so we seem to like to hold this 850 area on Tesla. And as long as Tesla is holding that 850 area, I have to tell you, church family, I think we could potentially maintain our bullish bias on Tesla. But the thing is with Tesla is it is subject to news. It is subject to news, right? But Tesla does have some momentum behind it. And I am looking for Tesla to retest 900. Don't ask me when. Okay? And I'm looking for Tesla to potentially, possibly reach 920 and higher. Okay? It's something that we trade here at our private server here at Brooklyn Traders and BrooklynTraders.net. Check us out. Follow us up on all platforms. And yeah. But right now, Tesla's consolidating. It's not ready yet. Okay, Tesla is not ready yet. Let's do a quick reset for the people who just joined the room. And here we are. Mic check. All right, this is Charles Becco here from Brooklyn Traders. I'm here being joined by Helen too, and we are breaking down the stock market here for you, ladies and gentlemen, tonight. And we want to answer the question, is the stock market going to heaven or is it going to hell? All right. And so we got a couple more tickers left. I know that, let me go through the list here. I see, okay, there's quite a list there. Let's do Neo and Upstart as well. Okay, let's do Neo and let's do Upstart. Let me take a quick peek. At the YouTube here. Okay, because I didn't see that anybody put the links in the chat. So we're going to just peek over to the YouTube real quick. And we're going to try to see if we could... Give me 1 second. Oh, this caption. Okay. Hey, no tickers on the YouTube. Okay, cool. So, next we're gonna have Upstart, and we also are going to have Neo from the audience. Okay, Upstart and Neo. So back to the show. All right. Let's look at Upstart. Okay. Why are you guys asking about Upstart? Where do you think Upstart is going? Upstart ain't going nowhere. However, this is good. Okay. Now I don't know if we have any Brooklyn traders on the show here, but from our Brooklyn traders that are out there, okay, what does this look like? What is this? Okay, I know you guys can't speak to me, but you should be shouting it at your TV screens from your housetops. This is a phase 1 market phase. What does that mean? This is an accumulation zone. When we're in a tight channel like this and we're just going sideways, I'm letting you guys know big money is typically adding. That's not a guarantee, right? But as long as we kind of maintain this channel here between $23 and I guess it's the real bar is between 23 and 35 bucks. Hey, this thing looks like it's looking to fix itself, right? We did see some big bullishness coming yesterday after Upstart's earnings, right? So this chart does looks like it's fixing itself on the weekly time frame here. Last week we had a big bullish engulfing candle signaling a potential uptrend here on Upstart. So for me, I would not be shorting this thing. I would be out of shorts. If you like this thing long term, maybe this is a good place to add some shares long term on Upstart. But if you're playing options, team, who knows when this thing will break out of its range, right? Who knows, right? So just be careful. There are certain options you could play to take advantage of the premium that's baked in, right? So I'm pretty sure the bulls and the bears are getting wiped out by option sellers here. But that's what I feel about Upstart. Helen, I know that you guys were talking about Upstart on your server there. Do you have anything to contribute about Upstart? I knew that. Oh, we got Mr. Tony up here. Okay, cool. But Helen, any thoughts on Upstart? Any thoughts at all?
We traded Upstart recently and made a lot of profit by doing those calls. I'm still actively watching Upstart tomorrow and next week and to see if there are any buy dip opportunities. I was told by one of our friends, Berger, he said there are huge puts, and he noticed one was closed, one was sold, and another one still open. So he was watching very closely, and when the second one, the big, huge option closed, maybe another rally opportunity. So, yeah. So, but I traded this stock recently quite often and make pretty good profit. And also, did you notice the earning was out the day before yesterday? It went down to 26.5, something like that, and then they came back strongly. So basically, the stock price is oversold compared with 400 at the high, and they missed one cent, like last 1 cent. The estimate was 3 cents. So, I mean, basically, the company has some downturn because the macroeconomic environment was very tight, and some commercial banks are reducing their contracts. So, because Upstart, their business model is kind of different it's different from a firm. A firm, they do a lot of individual loans, like tiny TV, or some young people try to buy some motorcycle, whatever, like bikes. They use the loan, and a firm, they actively they take the loans and they take the risks of the loans. Once they don't pay back, they have a huge potential risk to lose money. But Upstart is different. They only do they're third party. They collect commission between banks. So they are doing some evaluation and some commercial loans. So they don't take any loans. They just they collect. They charge commission instead of take loans to lend out or whatever.
Copy.
And their customers are big commercial banks, and from their customers are individuals millions of young kids or whoever want to get some small loans, which are different from the big loans as car loans or house loans, home loans, totally different. But all in this kind of environment, this sector, I don't think they are very promising, because once the interest rate increase and balance sheet shrinking, the transaction liquidity of the loans, anything that financial activities are reducing. So for long term, it might not be very good, but currently they have some bounce opportunities. Once Fed announced they're going to do QE instead of QT, they're going to reduce the interest rate, then those sectors will go to boom. Come back strong, very strong.
晚上好，你说啥 ？Very strong， 刚进来。
我说你很 strong。
没有，我不是 strong。
我说这个 affirm 和 Upstart，so once 就说 Fed change their policy from QT to QE, from interest increase to interest rate decrease, then the market will boom. But right now, the Fed policy is still tightening. So which means this sector is bouncing back, but not a very. So for long run, it's not so promising, but currently they are doing bounce. Oversold, completely oversold, from 400 to 20, 23, 22. I got in 24, I'm sorry. 24 was perfect entry point. So make a lot of profit by doing trades like calls.
Yeah, it's been a wild ride.
Question to Helen?
Oh, hold on. I'm sorry, sir. Just give us a second here. This isn't necessarily a popcorn room just yet. We are recorded and live on YouTube. I will take a question. Just give me a second to kind of level set the room. One second. And so, Helen, I want to thank you so much for your sterling analysis on Upstart. And so, yeah, you guys could see the chart here. It's kind of wild. It's kind of wild. I just occurred to me, and I do apologize. That to the members and Clubhouse here, we actually did not share the link. We shared it in the Telegram group, but we did not share the link to the stock market on Clubhouse, and I do apologize. So what I'm going to do here...
Oh, I can share your link here.
Yep.
Sorry for interrupting.
No.
I can share your link, the YouTube on top of the house.
Yep. Yeah, no, thank you so much, Helen. I just noticed it, okay? But for everybody that's actually on Clubhouse here, okay, there goes the link to the YouTube page. Is the stock market going to heaven or hell? Okay, so there it is. So if you guys want to actually watch what's being said on screen, okay, you guys should watch it on YouTube there. You can just try to make sure you put it on mute so that you're not hearing two audio sources. So apologies to the folks on Clubhouse there. All right. So that is on Upstart here. Now there was a gentleman with a question. We will take a question. Go ahead, sir. And your name?
Oh, thank you so much for the opportunity. My name is Shobhit. I actually wanted to ask a question to Helen about Upstart, right? One of the things. So I've been looking at this stock as well. And one of my reservations going in is that it trades at a PE of 37 and a forward PE of 47. So even if we look at, like the moon, right, Helen, which you refer to like 400, that would imply a PE of like 4 digits, right? Like, does that scare you, or like, are you still bullish in the headroom for this stock? Thank you.
I think it's bounced back because the oversold and 28. This is a tech stock, fintech. Fintech, it's still tech stock. It's hard to say because this kind of hot stock. Last year, did you guys remember that this stock was so hot? Everybody's talking about it. It's just skyrocket every single day. I think I'm just a momentum trade and just catch the bounce and make some bucks. Otherwise, other stuff that I'm not very, I didn't do a deep analysis. But I have friends, they work in this company, and they say they are still, some departments are still hiring people, and some departments we do think hire people, but their balance sheet is still strong. They said they are profitable, and people are happy working there because they are software engineers. So in Bay Area, if you are a software engineer, you pretty much paid very well, and other mechanical engineers, they probably get paid like half. So for example, like Tesla engineers, in mechanical side, and also people working in Tesla or SpaceX, they don't get paid very well. Why they go there? Because they want to get some experience because of the name of Elon Musk. That's probably the reason they want to go there. Looks like if you work for Upstart, you feel happier than work for Tesla. But stock-wise, it's a different story.
Showbits, I would like to... Oh, sorry. Thank you, Helen, by the way. I would like to kind of chime in or piggyback of what Helen just said. And so in this particular group and room, we are mostly traders that do technical analysis. We do fundamental as well. I will admit, I would say Helen is more with the fundamentals than I am. But as it relates to Upstart, we're just really playing an oversold bounce here. At least that's what I see. I mean, something that stretched all the way from 400 to $22. And again, you're 100% right? When you got a forward PE that's in the hundreds, right? And as a multiple, that's just insane. And so that price definitely is not sustainable here, right? But as long as buyers are stepping in to buy, as long as you can start seeing the chart curling up, what I personally see here is an accumulation phase that started from May 11th up till now. And if we could kind of break out of this channel, above $53, you could be bullish up to the daily 200, which I feel we are a magnet for, even if ultimately we could potentially go down. So that is our thoughts on Upstart. And Helen, again, thank you. Go ahead, Helen.
Sorry, Charles.
Go ahead.
There is one fundamental news. So there's some fundamental change environment in the financial sector. So about 2 weeks ago, there are two senators. They proposed a action for. They wanted to introduce more competition. They said they found out Visa and the MasterCard, their commission are too high. So they said they're too, they need to introduce more competition, more diversify this to diversify this industry. So at that day, when the senator posted their information, Visa and MasterCard was down a lot, like 3 or 4%. And then from that moment, Affirm, PayPal, Square, Upstart, SoFi, they all like bounced very strongly. You know what I mean? They said because Visa and MasterCard, those like big giants, they have occupied the market, like their market share was too high. They wanted to introduce some competition to diversify this industry. So like more competitors, which means those payment companies are beneficial by this proposal.
Thank you so much, Helen. Are you finished with that piece?
Sure. Yeah.
Okay, pretty cool. Before we do a reset here, again, I did have Mr. Tony here. He did come to the stage. Mr. Tony, if you're near your microphone, I would like for you to introduce yourself to the crowd, and if you could share with us just for a few minutes, what is your outlook to the market? Mr. Tony, the floor is yours.
Hey, Charles, how you doing?
We okay. We making it.
Good. I haven't talked to you in a while. I've been really busy, well, super busy. I suppose everybody's been busy with these, with everything going on. But just wanted to come in and support, when I can. And I hadn't seen the room just because I've been away. So I just wanted to come in and just say hi and support you. But my overall view of the market is, I trade daily for income. So it's, I kind of trade the chart that I have in front of me. So my long-term outlook, if I had to have one, I guess I would be bearish. I would not be looking forward to the next, say, 12 to 16 months. I think that the markets overall are extremely overbought. I mean, we're having this little relief rally here, but in my opinion, the market should have sold off heavily back in 2020, but it didn't. It continued to keep QE going, so it's been going and doing this thing, and now we've got this incredible inflation, because they printed too much cash. And, at some point you always have to pay the price. And the price has yet to be paid, in my opinion. But I think in the long run, or at least in the next, say, 12 to 60 months, the price will be paid. It will be paid in higher prices with inflation. It's going to continue. I don't think it's going to come down in terms of the things that are most important to it. And these stock prices, I think that they're going to, at some point, when the Fed gets tired or can no longer support the markets, then they'll sell off. Because just like you were saying, you got PEs at ridiculous rates right now, so they just cannot sustain themselves. But the thing that looks unattainable seems to be attainable or achievable because, the Fed and their policy. But at some point, the chickens will come home to roost. At least that's what I believe, Charles.
Yeah, I couldn't agree with you more. I almost had to look twice, Mr. Tony, when I seen that Apple was literally $10 away from an all-time high. I just couldn't even believe it. It's like this is a very wild market, but they, as they say, right, the market could stay, crazy longer than you could stay solvent. Did I say that right? You probably get it better.
Well, I mean, Apple has been the flagship of the entire stock market. So as Apple goes, so goes the market. If Apple tanks, if they let Apple go, then everything goes and will follow behind it. So it has been of the utmost importance to maintain Apple. It is really the shining star of all the stocks in terms of cash flow, the products, their innovation, everything they do. The United States need, 10,000 Apple corporations here in order to support the numbers that we're at right now. Unfortunately, that's not the case. So, again, at some point, in the old days, we dealt with fundamentals because fundamentals were critical to determine the directions of companies. But with, black being white, up being down, in being out, the truth being fake news being the reality, all you can do at this particular point, at least in my opinion, is just trade what you're looking at in front of you. Because we don't know, no one really knows. All we're doing is prognostication. We're trying to predict something, but we don't know for sure. If we knew for sure, like I always say, in my room, I'd be sitting on the back of my 200-foot yacht somewhere out in Aruba, right? If I knew, but I don't know, and none of us know, so, we can only, look at what we have in front of us and kind of go from there. That's where we're at right now. We can't really depend on the information that's being, disseminated. Other than seeing these red and green candles, I can't really tell anymore who's telling the truth. So fundamentals for me, I have read a prospectus for a 10K in years, maybe 15, 18 years already. It doesn't matter anymore. I've been fully, technical, I was trained that way, by the institution I work for, and that's just what I do, and that's what I've done, and that's what I teach. So that's kind of my outlook. I know unfortunately it's probably not what everyone wanted to hear, but that's just kind of the way I see it every day, Charles.
No, I agree with you. I said it several times, written in print. As Apple goes, so does the market. I'll actually let you know, Mr. Tony, I've been watching Apple so closely, especially on the monthly time frame. We are just bouncing out that I don't know what you call it. Some people call it the turtle. Some people call it the hope or the lope, like short or long setup, with the 30 candles. And Apple is just bouncing out of that on a monthly time frame. So I was looking for Apple. Well, the month is not over, right? It's still in the middle of August, but I'm looking for Apple to close above 165.50. It does that this month, and this the immediate bullishness in the market continues, in my opinion, right? And so, Apple for sure is a bellwether.
So let me ask you a question. So if we look at the daily chart of Apple, and say if you go back to say March of this year. Let's see here.
By the way, Mr. Tony, it's on the screen.
Yes,
so
sir.
if you don't mean to interrupt you. If you click the link that's above, it's actually I actually have it on the screen here, so you can actually look at it on the screen.
Oh, okay.
On the YouTube there. Yeah. And also for everybody else that's listening, we have 173 people on the room in Clubhouse. There was almost 3,000 unique listeners tonight here on Clubhouse. Please click on the link above your heads that's on the top there, and you will get to the YouTube, and you will be able to watch these charts live as we break them down. Go ahead, Mr. Tony.
So if you go back to mid-March of this year, you'll see that there was a high of, let's see, what date was that? That was like
I see it. It's 179.47, 330. Yep.
Yeah. So if I like to, I'm kind of like a visual learner, and I was kind of do things visually. So if I was running a marathon race, or if I had a runner in a race and he was running a marathon race, and he had run from that period there in March, okay, and all the way down to say the bottom at say 616, okay, it was at June 16th of this year, and then he had turned around and he ran all the way back up above that 200 to where he was at today, the high today. That's a heck of a run, right? I mean, you would probably be pretty darn exhausted.
Man, that's 3 marathons, Mr. Tony. That's 3 marathons. That wasn't like a jog around the block. This is 3. He went from 129 to $170. That's 3 marathons right there. Go ahead, Mr. Tony.
So if that being the case, when he reached that peak that we talked about of was it 179? If he was able to reach that peak again, that would be a heck of a comeback, right? I mean, that would be a heck of a run for him to fall all the way to the back of the pack and then come all the way back up. And then how much further do you think he could possibly go past the pack after exhausting all that energy?
No,
I mean, just
you're right.
Miles and miles, we just blast past them, or would he probably catch up to them and then probably you've seen those races where the guy spends all the energy trying to catch the guy, or trying to win the race, and then as he's, feet from the finish line, a guy just runs right past him because he just runs out of gas. He just doesn't have enough. I look at this stock the same way. Unless the Fed comes in, as I was saying earlier, and they interject him with some more glucose or insulin or whatever they inject these, he's running.
It's steroids. This is steroids, man. This is steroids. Look at this chart.
I mean, how much more can he surpass his previous effort? I'm posing a question.
No, I think your analogy is spot on here. Okay, and so let me just ape you for a second, right? Let me just copy what you just said. So for everyone who's just joining us, right? What Mr. Tony is contrasting, right, is the run here on Apple, okay, to someone who's like sprinting in a marathon, right? And this comparison started way back here from March the 14th, 15th, where the low bar was, all the way to retracing up to the all-time highs. After we went from here to there, this is the kind of pullback we expected, right? Now, imagine we went from a farther distance, right? That's why I said it's like 3 marathons, because if this is like one leg right here, this is 1, 2, this is about 3 legs that was made in a relatively short time. Again, spitting distance of the all-time high. We could potentially have some kind of severe pullback based off of this. Right now, Apple has, price has pretty much left the 8 simple moving average, and it's been gapping up. It's been gapping up as if it has earnings like every 2 weeks, right? So there's actually live gaps that are open here on Apple. We've got a gap here at 132. Okay, we've got another gap, and gaps are not guaranteed to close. I don't want to, make a religion out of this, right? But it is something to take a look at. We have a new gap opened on this current bull run, which started in June, right? Which is 2 months ago, right? We have a gap here at 133, a second gap here at 157, and then a third gap that was made like 2 days ago. What is that, Tuesday? So yeah. So, we could expect that when this sprinter stops running, Mr. Tony, that he could probably have a hell of a runner's hangover. Any more to contribute?
That's just my thoughts on it. I try to, I also look at things kind of like, in pictures, and I always tell my people, look, there's actual individuals, there's traders, there's institutions, there's real money behind these candles. It's not just candles on the screen. I mean, there's reality out there behind this. So you have to think in terms, because sometimes we tend to lose reality, and that's why I kind of put things in pictures and say, think of it in these terms and see if that makes sense to you. And, sometimes it does, and sometimes it doesn't. I mean, there's a lot of other things that you want to factor in as well. But for the most part, when we're looking at charts, we're trying to read these charts. We're trying to understand. We're trying to look through the charts and see the other side. And what is it really telling us? And because the information that we're getting sent to us makes no sense. We can't trust it. We can't really trust it.
And Mr. Tony, sorry, pardon me. Let me interrupt you a little bit, right? Because again, this is a new room here, a relatively new room in terms of Clubhouse, right? And there's some members here that may not know exactly who you are. Could you just tell the crowd about just some of your experiences and exactly how long you've been trading in the market? Because I don't know if they really understand why I personally have so much respect for you, sir. Could you just tell us a little bit about yourself, how long you've been trading the market? Mr. Tony, go right ahead.
Well, I've been in the industry for 32 years. I've been an active trader for over probably 28 years. I worked for Schwab's most active traders division after I left. I started off when cool as a runner back in the day. You guys probably weren't even born. When we actually used a pencil and we would write trades on a little ticket. Okay. So, I worked for an insurance institution, traded for an insurance institution for a while, and then I, left and began to trade for myself. And, just kind of been doing that for, ever, it seems like, and it's been really an interesting ride, seeing all the different markets, the crashes, the comebacks, all the different scenarios from 9/11 happening and how the sell-offs happened there, and then the tech wreck and then that Black Friday or Black Monday they want to call it, and it was it's been an interesting ride to see all this happening, to hear Ben Bernanke say that there's no problem, and then all of a sudden there's Lehman Brothers is out of business. And then, the junk bonds with Michael Milken, and my buddy used to work for Drexel Burnham Lambert, and, and how extravagant they were and how they threw money around. I mean, it's just been phenomenal to see it. I tell people all the time, you guys have so much technology at your disposal. It's so easy to do this trading that we're doing right now. I find it to be just phenomenally easy because we used to use a booklet that we got from Investors Business Daily with charts that was printed like 2 weeks ago.
Wow.
And we would have to make decisions based on that. And now you guys have it on your freaking phone.
Some of us have it on our watches.
Like Big Tracy or something, So it's been really interesting to see that whole cycle, that whole evolution occur. It's been really interesting to see, and where I was a pariah, no one ever wanted to speak with me, They thought that, I was just, he's one of those stock guys, those gambler guys. And now that I'm old, everybody wants me.
Right.
But anyway, that's kind of it. That's kind of the Reader's Digest version.
All right. So, Mr. Tony, again, thank you so very much. Again, one of you can say the godfathers of the stock rooms here on Clubhouse, gracing us with some much needed information and levity here on the stock market show tonight. Are we going to heaven or to hell, with the stock market? Mr. Tony believes that, again, within 16 to 18 months, he looking for some more bearishness here. Again, we did see a greater pattern emerging. I see somebody just, please mute your mic. Thank you so very much. And so, we do have an emergent pattern that's here, right, where we see cycles of kind of coming down, bouncing to the 200 and going back further. Again, we talked about it many times that Apple, out of all of the companies, is the absolute strongest in the stock market. And so there's no surprise why it is kind of doing the things that it's doing, right? And so let's do a quick reset here, and we will finish up with the final leg of the show. All right, again, team, this is Charles Becco, former financial advisor here from Brooklyn Traders, a humble trading community out of Brooklyn, New York. I'm joined here on the stage by Helen, too, one of the largest stock market clubhouse moderators. Also, Mr. Tony, a phenomenal voice in the clubhouse stock market ecosystem. And we are talking today about just the general market. Are we going to heaven or to hell? Right now, we definitely see some bullishness on the daily and the shorter term time frames. We do see a lot of support below us, but is it all smoke and mirrors? Could we just kind of retrace to the mean and go to the highs, or maybe this is all a smoke show and there is no support level and we go right down to the lows? Okay, and these are the questions we are attempting to answer. Definitely follow all the moderators here on stage. Definitely check us out. My company here at www.brooklyntraders.net. Check us out. Follow me at Charles Becco on all platforms. The moderators do have their social medias linked into their profiles, so check them out as well. And definitely follow the YouTube, right? It takes a lot to kind of put that YouTube together, put that multi-stream together. And so definitely follow us on the YouTube. Give us a like and a subscribe, if you will. And let's get to the latter portion of the show here. All right. So, so we beat Apple to death with a stick here. I do want to take a look at Netflix, right? Because actually, you know what? Let's beat up on Apple a little bit. I do want everyone to pay attention here. So there are a lot of open gaps here on Apple, right? And there is like a super cycle pattern here on the weekly time frame. I'm going to stretch it back to 15 years. And clearly phase 1, phase 2, and we still may be potentially in a phase 3 market phase. As crazy as this chart looks, right? From 180 to 136 here. This still may potentially be a phase 3 market phase. We will not know, okay? we would need either a break below 137 being the low part, or a break above 182, the high point here on Apple. Again, I do like to look at these longer term charts. Okay, they are very interesting. I mean, my goodness, this bounce in Apple, just something else, otherworldly, right? But yeah. All right, so let me get on to Netflix, because Netflix has something going on with it. Okay, as you can see here from this kind of boxed off the zone, Netflix is trying to get into this ginormous gap that was formed on May the 18th or May the 19th, I believe, when they had really bad earnings outlook. They prophesied gloom and doom, and I remember the stock dropped like, 25-30%, right? And so right now we are knocking on the door here, and we do have momentum to potentially push into this gap between 251 and 327. And as you've seen, right, if you look at a lot of the stock market, right, a lot of these stocks have gone up to either test their 200 or they are under the 200, right? And so, Mr. Tony, with your runners analysis, right, as the Apple sprinter gets tired, right, you have a Netflix sprinter who is just getting started, right? And so look at Netflix to potentially give you some more strength here, as it attempts to, when it comes to these big, nasty, ugly, crazy, like gaps like this, in my opinion, this will be more mystical and esoteric. I know, Mr. Tony, you may not go for this, but in my humble opinion, I don't think the charts or the market likes these gaps, and I think they like to tend to fill when they're this big and nasty, right? We're not talking about like a gap that's like $2 or $3 or 50 cents. We're talking about, what's this, 46. Let me embarrass myself by not being able to do math. 54, almost like $78, $80. It's an $80 gap here, everybody. So again, if you look at Apple, right? Apple, way above the 200. You look at AMD, tested, pushed above the 200, right? You look at NVIDIA, just came shy of the 200, right? Just came shy. Let's look at Microsoft, way above the 200. Let's look at GOOG. Oops. Right under the 200. Let's look at Amazon. Right above the 200. Let's look at Meta. Now, Meta, I will tell you, in my opinion, Meta is more akin to like a Netflix, right? Way under here, right? And so for me, if the tech rally continues, okay, I'm actually going to be looking for more leadership, actually, from Meta and Netflix to kind of bring us to the promised land, right? So in my opinion, I think Meta is still kind of hanging out down here. I mean, it's still in this trading channel between 183 and 154. And so, again, if Apple could kind of keep itself together, Tesla doesn't vomit the bed. I don't want to say the other word, so I just said vomit the bed. I'm looking for Meta to potentially retest this 233 area or the 200 area on the daily 200. And I'm looking for Netflix to potentially, because we're knocking on, heaven's door here, to potentially get into and potentially fill this gap from 242 to 327. Okay. Now I'm gonna take a really quick look through the chat here. Okay, I don't see any more tickers. And I think that's it for tonight. We've been running here for about an hour. That's a good enough time. It's currently 10 o'clock. Helen or Mr. Tony, do either of you lovely people have anything more to contribute to the show before we close down here tonight? Mr. Tony or Helen? I would say Helen, if you could go first, ladies first. Helen, a word from you.
I would say the market is data driven. So the CPI has played a lot of roles in to determine where direction to go. Since CPI has been peaked this month data from 9.1 to 8.5. So we have to closely watch the number come out like next month. If it continues to drop, the market will be, bullish for a while. If it bounces back, so the market will be like more tend to be bearish. So I think Fed, they are still, considering increased rate consistently until end of this year. So it all depends on CPI and the other economic data like NFP, non-farm payroll, and production, the GDP, the production rate. So all the economic data will impact the market. So we have to closely watch all the economic data. And right now, the market is kind of bullish until probably a week or so. And then before Labor Day, it's kind of okay. So after Labor Day, we have to be very careful and cautious. And before the election day, November 8th, I think there will be okay. The market will be like bullish for a month or so. But exactly before November 8th, it might be pulled back because every time when the market has uncertainties, like because election midterm election is on exactly November 8th. So I would say like a couple months before November 8th will be okay, and exactly a week before that will be cautious again. So this is my little prediction, my humble opinion. It's not prediction, it's just my observation for the past few years.
All right. Again, thank you so much, Helen, for that analysis. And Mr. Tony, any last words from you for the crowd? Any advice you want to give us, the young people?
Wow. Well, I would just say, just to keep things simple, trade your edge, find your setups, understand your technicals. If you understand your technicals, you'll understand that you don't have to wait for stocks to trade up. You can make a lot of money in downward markets. As a matter of fact, in the next 12 to 16 months, I believe that you will have some of the biggest opportunities of a lifetime in terms of the market trading to the downside. So don't just get stuck in waiting to take a long position. Take short positions too. That's what makes a market, buyers and sellers, right? A guy willing to sell and a guy willing to buy, right? I think it's going up, you think it's going down, all right? So Mo thinking that the market has to go up. What's a good market? What's a bad market? The stock market is just the market. It is what it is, and that's all that it is. You just have to learn how to trade your edge. So if you're a technical trader, which I recommend being one at this particular point in the junction, I would be a technical trader. I would trade my edge. I would understand that markets move up and down, and they provide opportunities both to the upside and to the downside. So that's pretty much it. All right. Good luck to you guys out there. I wish you the best.
All right. So thank you, Mr. Tony, and thank you so very much to Helen as well. And thank you to our audience here for tapping in with us faithfully from time to time. Again, this is Charles Becco from Brooklyn Traders, and I want to wish everybody good night. Now, the Clubhouse room will be going on, so if you guys want to sit down and hang out, you're more than welcome to do that. But the stream will shut down. We will be shutting down the stream. And yeah. Again, follow us, brooklyntraders.net. Make sure you follow your moderators. And definitely follow YouTube, okay? I do see the subscribers coming in. And don't forget to click that little bell icon here on Clubhouse. So again, thank you everybody. Thanks, and God bless.
Retro.
Thank you, everybody. Appreciate y'all. We will have the links to the show posted up. Don't forget to follow us on Twitch. We're also on Twitter and the YouTube at Brooklyn Traders. Thank you, everybody.